Let's do a quick poll. How many of you look at spot price before buying gold and silver? How many of you decide on a gold and silver purchase in relation to the spot price of those metals? Don't put your hands down yet, I wasn't finished counting. I'm willing to bet that a lot of people do, but should you? Hey everyone, welcome to another episode of Campbell's Coins. This topic might give me the most hate mail, but I'm hoping that some people think about what I'm actually saying instead of having a visceral reaction. I see loads of individuals on Instagram happy when spot price decreases like it has in the last couple weeks. I bought in the dip. Sound familiar? Spot price for gold has dropped about $85. People scoop up an ounce of gold for $85 less and cheer. And goody on you. Did you think it was a good buy now, but it wasn't when it was $85 higher? If you're buying gold now, but gold dips to, let's say, $16.70 an ounce in a couple weeks, was your decision a bad one? I often hear people talking about waiting for the price to reach a certain point before they get back into buying either gold, silver, or platinum. Let me show you why this is a foolhardy notion. It costs money to mine these metals out of the ground. Once they are out, they have to be refined into the purity that you see on your screen. Last I heard, it costs $18 an ounce to mine silver from the earth. This increase is due to inflation in the pricing of materials, parts, and labor, which all goes into silver mining. If you're an individual who is saying that you're not going to buy silver until it hits $18 an ounce, why would any miner sell silver to just break even? Just so that you can buy it at $18 an ounce. If you look at the supply crunches of 2008 and 2020, when gold and silver dropped to a certain price, dealers stopped selling at that price. They also sold out of product, but we see this type of thing happening now. If the spot price drops too much, all of a sudden, online bullion dealers, their supply just disappears. Everything is out of stock. And then magically, when it goes up a little bit in price, those same items come back into stock. Miners stop selling and supply dries up until the price rises again. Right now, we have a hefty premium attached to silver's price. And I would say an average is around $3.50 above spot. If spot is at $19 an ounce, dealer sell price is around $22.50. So if you're one of those people who says that they won't buy silver until it hits $18, you're really waiting for it to hit $15.50 an ounce. Again, this goes back to, why do you think miners are going to take a loss just so that you can buy metal at a specific low price? Here's a hint. They won't. I would rather buy silver now at $22.50 while there is still a supply of silver to buy than wait for the small chance for the price to fall $3 to $6 and hope that there is still silver around to purchase. What good is a $15 silver price if there is no silver to buy? The exact same thing can be said for gold and platinum. The price to mine platinum was around $800 an ounce, but this figure was well before inflation struck and everything else from the last 2 years. I'm sure it's much higher today. There's also this braggadocious behavior where people will talk about their dollar cost average. My dollar cost average for silver is $17 an ounce. My average for gold is $1,500 an ounce. I bought gold for spot, blah, blah, blah. These are all the same individuals who are stacking for an SHTF scenario. I'm not denigrating their position, but I do have one simple question for them. Do you think your dollar cost average will matter in an SHTF scenario? Of course not. You're trading and bartering for items of need. No one will care that you bought your silver dime for $1 a piece, or that you got your 1 ounce gold eagle for $500. The only thing which should matter is owning ounces, not figuring out the price you paid in a fiat currency that is bogus to begin with. Another little tidbit for you to chew on. What if you trade your $1,900 gold for silver when the gold to silver ratio increases? Anytime you're trading ounces for ounces, the dollar cost average doesn't matter. Gold and silver go up, gold and silver come down, and there is a slew of wannabe YouTube Kitco contributors with the answers for why this is happening. The Fed was aggressive with their response, and therefore gold is falling. It's nauseating, especially when a week goes by and it turns out that they were wrong. The saying, "I'm not a financial advisor," is never more relevant than in those sobering moments. What about when you know precious metals should be going up, but they aren't? Gold has served as a hedge against inflation for a very long time, except now it hasn't. Inflation has been rising steadily since 2021. Last year, we had the media and the government telling us that inflation was just transitory. Remember all that? That it's not really happening. It's only temporary. Now, they've changed their tune and they feel it's going to be around for much longer. But they managed to shift the blame. Somehow, a war started in late February 2022 caused prices to go up throughout all of 2021. Makes sense, right? How many of you have seen your costs go up across nearly everything? This is because of the Fed's monetary policy. I'm sure you have heard this stat before. I know I have repeated it throughout my videos. 40% of all the currency ever printed in the United States, going back to the founding of this nation in 1790, 40% was printed in the last year and a half. That is a lot of greenbacks in a short amount of time. It was announced today that the official inflation rate is now 9.1%, but we are at a lower gold price than this time last year, 5% lower to be exact. Silver's price was $26.26 on July 13th, 2021. That's a 27% difference compared to today. Let's say you just woke up from a 10-year coma. I tell you everything that's going on in the country and around the world, and I ask you, guess the spot price of gold. Would you guess $1,732 an ounce? I know I would not. Is spot price relevant anymore? When demand for gold and silver surges to the point where premiums rise and it is no longer in the same neighborhood as spot, should spot price be used as a valuation marker for these metals? We have seen this disparity for the last 2 years. It's finally coming down for silver, but still far from a reasonable level. If demand is keeping these premiums up, why are we seeing spot price fall so much for both gold and silver? One explanation I've heard for the drop in gold and silver's price is margin calls. When everyone is pulling out of the market, those who bought on leverage are given margin calls. Buying on leverage is basically putting a little money into something to get a big payout. These individuals are margin called, told that they have to add more money in or their position will be sold off. So they dump other assets to pile into these margin calls. On principle, I get it. Logically, it doesn't make a whole lot of sense. How can demand for gold and silver be both high and an asset that people are trying to get rid of? Another explanation I've heard is that the dollar went up and that is what's causing the gold price to fall. Okay, well, let's look at some info here. Here we can see a chart of the price of gold in relation to the dollar index. All right, very strong inverse correlation here. Not matching up exactly, but over the course of this chart, it's pretty darn close. Think about this though. The dollar is being rated strong. We are experiencing similar inflation like we did in 1981. But the US dollar index in 1981 was in the mid-80s. Today, the US dollar index is around 110. Now, I'm not saying that inflation and the US dollar index should be correlated. What I am saying is I believe the US dollar index can be manipulated higher to lower the price of precious metals. The US dollar index was created around 1973, I think. Someone fact check me if I'm wrong. And it measures the US dollar against a basket of foreign currencies. It's like rating dog poop based on smell. Well, this poop doesn't stink as bad as the rest, so obviously it's the best. Personally, I don't think that the US dollar index is valid, but man, when it goes up, silver and gold drop. This brings me to my next point. Raise your hand if you feel the precious metal market is manipulated. No need to believe or not believe. It's proven manipulated. I think Salivate Metal just released a video about some traders heading to prison for their efforts in the gold price manipulation. And Silver Oceans did another great video on silver's price manipulation. Some will argue that this manipulation does happen, but it's on such a small scale it has no effect on the price. Others will still deny it, even though there's proven evidence of any price manipulation happening. How many of you feel the spot price is a joke and doesn't represent these metals' true value? If you feel the precious metals market is manipulated and that spot price doesn't represent any of the metals' value, why do you use spot price as an indicator of when to buy? $1,900 is too much, but $1,850 is the sweet spot? What is that $50 in the grand scheme of things? An ounce is an ounce. If anything, we should be extremely happy for manipulation. It gives us extra time to stack these precious metals at a much lower price. If gold dropped to $300 an ounce, is that what it's worth in your eyes? What about silver? If silver drops to $5 an ounce, do you really feel it's worth that amount? If you answer yes to any of these, I don't feel that you realize how rare these metals are, nor do I think you realize how desperate we need silver to survive. I look at metals' rarity and its uses. You stack precious metals because you don't trust the system, right? But when it comes to pricing, you'll totally trust the system that gives it its pricing? I just don't feel like that makes sense. I don't care if gold's valued at $50,000 or $5. The value that they give it doesn't matter to me. Now, what I'm not saying is go spend $2,500 on a 1/10 of an ounce bullion coin. You should definitely shop around for the best price. What I am saying is just don't fixate on these small drops here and there. Overall, gold's price has been very steady to inflation. It hasn't dropped like everything else that we've seen with the markets, Bitcoin, and soon to be the housing market. A rising price in metals is an indication of a failing economy. Maybe this is why the US dollar index has been manipulated upwards. A made-up index certainly cannot be spoofed to fool US consumers, right? The longer that they can keep the price of gold and silver down, the longer that they can keep the party going. Instead of looking at spot price, look at the world around you, look at your country, look at the supply of those metals, look at the economy. Do things make sense? The stock market is essentially being held up by 5 massive companies. The rest are definitely not doing so well, especially in the last few months. Stop looking at price. Price is irrelevant. What do you have in your physical possession? Gold and silver are vastly undervalued in relation to everything. Gold is a steal at $1,730, and it's a great buy at $2,500. Silver is the deal of the century right now, whether it's at $18 or $100. They can set the price to $0, $5, $1,000. You need to take your mind out of the price. It literally doesn't matter what the paper price is. What is its true value? Your fiat-minded mentality will fracture the moment you come to the realization of the purpose and true value of gold and silver. Your time is your most precious asset, and I appreciate you spending it here with me. If you liked what was discussed here, let us hear your voice in the comment section below. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.